Welcome, StockExplorers listeners, to The Deep Dive. This is where we unpack the sources you've sent our way. Articles, research, notes to get you up to speed fast.
And today, we're taking a close look at Agenus Inc.
Right. A company in that immuno-oncology space. It's been generating quite a bit of buzz lately, hasn't it? Especially for potential investors.
Absolutely. They're working on therapies trying to get the patient's own immune system to fight cancer. Huge potential there.
Yeah.
And their main combo, BOTBL, well, the data is definitely worth digging into.
So our mission today, go through the material you provided, we'll simplify the complex stuff, understand the core business, look at the recent big news, the financials, the hurdles.
And critically, what milestones you need to watch.
Exactly. Sticking only to the info and the sources you shared, explaining it clearly, particularly from an investor's angle.
Yep, a clear, actionable overview based just on what we have here.
Okay, let's get into it. The most recent, really significant news was that collaboration with Zydus Lifesciences, announced June 3rd, 2025. What was the headline figure on that?
The big number they threw out was up to $141 million.
Up to being the key phrase there.
Always.
Yeah.
But the immediate cash part, that's what really matters right now for Agenus.
Right. Let's break down that immediate cash. What did they get up front?
Okay, so $75 million cash. That was for transferring their biologics manufacturing facilities, the ones in Emeryville and Berkeley, California.
Okay.
On top of that, Zydus made a strategic equity investment, bought $16 million worth of Agenus shares.
And the sources flagged something about that equity price, didn't they?
They did. Zydus paid $7.50 per share. And the key thing noted was that this was a premium to where Agenus was trading at the time.
Ah, interesting. So not just buying stock, but buying it at a higher price.
Exactly, which brings the total immediate gross proceeds to $91 million. That's the $75 million cash plus the $16 million equity.
Got it. $91 million now. So where's the rest of that potential $141 million come from?
That includes up to $50 million in potential future payments, contingent payments.
Tied to what?
Tied to Agenus actually using the manufacturing facilities that Zydus now owns. So as Agenus needs more BOTBL made over the next 3 years for trials or maybe commercial supply, Zydus could hit certain revenue milestones from manufacturing for Agenus, and that would trigger these payments.
So Agenus sold the plants, and now Zydus runs them as a CDMO, a contract manufacturer.
Precisely. Zydus gets the assets to build this new bio-CDMO business, and Agenus is actually their first customer. They have an exclusive manufacturing deal for BOTBL.
Which secures their supply chain, presumably.
It does. It secures a manufacturing partner moving forward.
What else was in it for Zydus? Did they get rights to the drugs?
They did, but it's limited. Zydus got an exclusive license to develop and sell BOTBL, but only in India and Sri Lanka.
Okay, specific territories.
Right. Zydus handles everything there. Agenus gets a cut.
How much?
A 5% royalty on net sales Zydus makes in those two countries.
Mm-hmm.
So potential revenue for Agenus without the operational headache there.
And crucially,
Agenus kept all the rights for the big markets, US, Europe, places like that.
okay, let's talk strategy. Beyond just the cash, what are the big picture pluses for Agenus here?
Well, a huge one is cutting operational costs. Running manufacturing plants is, expensive, lots of fixed overhead.
Mm-hmm.
By selling and becoming a customer, they swap those fixed costs for variable ones, costs tied to actual production. This was a key part of their plan to slash their annual cash burn.
Frees up cash and focus for R&D.
Exactly. Focus on the pipeline, especially BOTBL. Plus, having that dedicated manufacturing partner helps de-risk things for later stages. And Zydus gets first dibs on negotiating to make future Agenus products too.
Any downsides mentioned? Risks.
Well, the deal still needs to close. Standard conditions apply. They're aiming for within 60 days of June 3rd. If it fell through, that'd be bad, obviously.
Sure.
And, anytime you rely on a third party for manufacturing, there's counterparty risk. You're depending on Zydus to deliver.
Now, the timing. Agenus's cash was really low before this. The sources mentioned that. Did it feel like a desperation deal to some? A fire sale?
Yeah, that perspective is definitely noted in the materials. I mean, they ended Q1 2025 with only $18.5 million cash. They absolutely needed money.
Right.
But the counter-argument presented is that this was strategic. They'd already talked about selling non-core assets like manufacturing to focus on R&D.
So this fits that plan.
It does. It achieved that, locked in a manufacturer, got that premium price on the equity, and they kept the major market rights. The stock actually jumped initially, suggesting the market saw it as, well, maybe necessary, but also strategic, not just a pure fire sale.
Okay, shifting from strategy to the science itself. Agenus's future really hangs on BOTBL, doesn't it? What are these drugs and why the excitement?
So the core is Botensmab, or BOT. It's usually given with balstilimab, BAL, which is a PD-1 inhibitor. Now think about solid tumors, like colorectal cancer. Many are considered cold.
Meaning the immune system isn't really attacking them.
Exactly. They don't have many immune cells inside, and standard immunotherapies like PD-1 inhibitors often don't work well alone. BOT is designed to change that, to heat things up.
How? What's the special sauce with BOT?
It's an FC-enhanced CTLA-4 antibody. Let's simplify that. CTLA-4 is another immune checkpoint, kind of like PD-1, but works a bit differently, often earlier. The FC-enhanced bit is the key innovation here.
Okay.
It means the antibody molecule is engineered to interact much more strongly with other immune cells around the tumor. And a really critical effect of this is that BOT is very good at killing off specific suppressor cells called regulatory T cells, or TREGs, inside the tumor.
TREGs are the ones telling the attack cells to calm down.
Pretty much, yeah. They put the brakes on the immune response. BOT helps remove those brakes by depleting the TREGs. And it does more. It activates other immune cells, helps prime new T cells to see the tumor. This whole mechanism, especially getting rid of TREGs and boosting immunity quickly, they've seen effects in just 2 weeks. That's how they hope to turn cold tumors hot.
Making them vulnerable to immunotherapy. And their big target for this is MSS colorectal cancer, microsatellite stable CRC. Why focus there?
Because MSS CRC is the vast majority, maybe 85%, of colorectal cancers. And it's notoriously cold. Standard immunotherapies just don't do much in advanced cases.
Prognosis isn't great there?
No, typically poor. Advanced MSS CRC, standard survival might be 12, maybe 18 months. So a huge unmet need. If BOTBL works here, it's potentially a massive market.
What data do they have backing this up in MSS CRC?
Well, at ASCO 2025, they showed data confirming the mechanism, that BOTBL really does boost P-cell activity, priming, diversity in these patients. Clinical evidence supporting the cold to hot idea.
Okay, mechanism support.
And interestingly, they also think they've found some early blood biomarkers that might predict who responds best. That could be huge for picking patients later on.
But what about clinical outcomes, survival, response rates? That's what investors really want to see, right?
Absolutely. And that brings us to the next big thing, which is coming up very soon, July 4th, 2025, at the ESMOGI conference.
Okay, what are they presenting?
Updated data from a much larger group, an expanded cohort of 123 patients with metastatic MSS CRC, but specifically patients who didn't have active liver metastases.
Why that specific group? No active liver mets?
Because in their earlier, smaller data sets from the phase 1 trial, this group seemed to do much better with BOTBL than patients whose cancer had spread actively to the liver. Liver mets are often tougher.
What did that earlier data show for them?
It suggested a median overall survival, the MOS, of over 20 months in that no liver mets group, which is, quite a bit better than the standard 12, 18 months.
So ESMOGI is about confirming that signal in a bigger group.
Exactly. It's 60% more patients than they've shown before for this subgroup. And crucially, they plan to report the actual median overall survival and the 2-year overall survival numbers for this expanded cohort, mature survival data.
That sounds like a make or break data point.
It's definitely a critical one. It will really tell us if that early promise holds up and will guide how they design the big phase 3 trial. Market's watching this very closely.
Okay, July 4th, ESMOGI, definitely on the radar. But Agenus isn't just CRC, right? BOTBL is being tried elsewhere.
Correct. They're looking at other tough cancers, often cold ones. For instance, HCC liver cancer. At ACR 2025, they showed data in patients who were heavily pretreated, already failed PD-1 type drugs.
And the results?
An overall response rate, ORR, of 17%, and a median overall survival of 12.3 months. In that difficult refractory setting, those are considered pretty meaningful numbers.
I also saw something about sarcomas. Published data.
Yes, that was notable. Phase 1b data in relapsed refractory metastatic sarcomas, published in the Journal of Clinical Oncology, JCO. That's a top-tier journal.
Sarcomas are tough too, right? Often cold.
Very much so. The data showed an ORR of 19.2%, a disease control rate, DCR, of 65.4%. But the really striking number was the median duration of response, MDOR.
How long?
21.7 months.
Wow. So when patients responded, the response lasted almost 2 years on average.
That's what the median suggests, yes. Very durable responses. And the 12-month overall survival rate was 69%. For metastatic sarcoma, especially refractory patients, that's promising stuff. And getting it published in JCO adds a lot of credibility.
They're also looking before surgery. Neoadjuvant.
Right, the NeoASIS study.
Yeah.
Data also at AACR 2025, using BOT-BAL before surgery in various solid tumors that could potentially be removed.
What kinds of tumors?
Included some that are often hot already, like certain types of colorectal cancer, but also cold ones like triple-negative breast cancer and sarcoma.
And the results there?
High rates of pathological response, meaning the tumor shrank significantly or disappeared by surgery time, like 90% in one group, 80% in another. They even saw complete responses, PCRs, no cancer left at surgery in some patients.
What's critical for a pre-surgery treatment like this?
Two things mentioned: no major safety issues causing dose limits, and crucially, no delays to the planned surgery. You don't want the pretreatment messing up the operation.
So, potential for chemo-free options before surgery?
That's the hope. Could improve outcomes, expand the market for BOT-BL significantly. They mentioned other neoadjuvant CRC trials supporting this direction too.
And quick mentions of gastric and pancreatic cancers.
Yeah, briefly. Gastric, they're trying a triple combo, looking at immune activation. Pancreatic, super tough cancer. They have trial designs mixing BOT-BL with chemo, and some science suggesting adding another drug, a CXCR4 inhibitor, might help warm up the tumor environment. So the takeaway is they're seeing signals across, I think the sources said 9 different cancer types, suggest the mechanism might have broad applicability.
Okay, that clinical pipeline, especially ESMOGI, is clearly the big potential upside. But let's swing back to the financials. We touched on the low cash before Zydus. Can we flesh that out? Q1 2025 snapshot.
Yeah, it was stark. End of Q1, March 31st, only $18.5 million in cash and equivalents.
But they reported revenue, right? $24 million or so.
They did, $24.1 million, and this is key for investors, most of it was non-cash royalty revenue.
Explain that. Non-cash revenue.
It mostly relates back to that deal they did with Ligand Pharmaceuticals in May 2024. They got $75 million up front then, in exchange for future royalties from partners and the sort of synthetic royalty on future BOT-BL sales.
Okay.
So for accounting, they recognize parts of that deal as revenue over time. But it's not new cash coming in the door each quarter to pay the bills. It's money already received or structured differently.
And how much cash were they actually spending? The burn rate?
In Q1 2025 alone, they used $25.6 million just in operations.
Ouch. So burning $25.6 million with only $18.5 million left.
Yeah, you can see why the Zydus deal was absolutely critical. They were running out of runway fast.
Okay, so now factor in the Zydus deal. That $91 million immediate gross proceeds. How does that change the runway calculation?
Well, starting from the $18.5 million, add the $91 million. You get a pro forma cash position around $110 million-ish before Q2 burn and deal costs.
Right, and are aiming to cut costs too.
Big time. The sources mention efforts started late 2024, and the target is to get the annual cash burn down to about $50 million by mid-2025.
Down from
over $100 million annualized previously. Selling the manufacturing plants was a huge part of that $50 million target, getting rid of those fixed costs.
Okay, so if they hit that $50 million annual burn, that's like $12.5 million a quarter. How long does that $110 million potentially last?
Simple math suggests maybe 8 or 9 quarters. So potentially over 2 years of runway, starting from mid-2025. It's a significant extension, a vital break.
Phase 3 trials, especially a big one in MSS CRC, those cost a fortune, right? Hundreds of millions?
Absolutely, and the sources are pretty clear on this. While the Zydus cash gets them through the door, gets some breathing room, and allows them to start the planned Phase 3 in the second half of 2025.
It's not enough to finish it.
Highly unlikely. Not if they want to run a big global trial themselves in the U.S. and Europe. They will almost certainly need significant additional funding beyond the Zydus deal and current cash, even with the lower burn rate.
So where does that extra money come from? What are the options?
Well, the sources mentioned they're actively looking for more partnerships. Specifically, a major U.S. or European partner for that Phase 3 trial. That's the preferred route.
Makes sense. Share the cost and risk.
Right. Other possibilities. Milestone payments from existing deals, those contingent payments from Zydus kicking in, maybe selling other assets like that vacuole facility if they still own it, or, going back to the equity markets if conditions improve.
Any other financial flags? Debt, lawsuits.
Yeah, they do carry debt. Around $63 million end of Q1. Total liabilities were higher, about $209 million. So that needs managing. And yes, litigation. A dispute with a contractor, MedPace, and that investor class action lawsuit. Those are potential drags on resources and management attention.
Okay, let's talk about the investors themselves. It's complicated, isn't it? The sources point to a long history of frankly, shareholder value destruction. Stock price way down, dilution, that reverse split in 2024.
Yeah, that history definitely casts a long shadow. You see comments noted in the materials reflecting frustration, even some distrust of management among long-term holders.
Why the distrust? What are the specific complaints?
It seems to center around the repeated need for capital raises, the dilution that causes, and some concerns about executive compensation, things like proposed option repricing or grants of retention shares right after the reverse split. These things can rub investors the wrong way, especially after long periods of poor stock performance.
And management's rationale for the compensation.
The sources outline their view. Needed to attract and keep talent in biotech, preserves cash instead of paying higher salaries, aligns incentives, and they argued their equity pool was just depleted. There's also that class action suit alleging misleading statements, which adds another layer.
But on the flip side, despite all that history and the financial tightrope, you have this argument that the stock is a bargain right now, undervalued. What's driving that view?
It's almost entirely based on the perceived potential of BOTBL.
The science, the data we discussed.
Exactly. The promising survival hints in MSS CRC without liver mets, those durable sarcoma responses, the neoadjuvant potential, the fact that BOTBL is targeting huge unmet needs in tough cancers.
And the unique mechanism.
Right, that FC-enhanced design, the TREG depletion, the idea that it might actually work where other immunotherapies fail in cold tumors. Proponents point to analyst price targets way above where it trades. It's basically a high-risk, high-reward bet. If the science pans out, if they get approvals, the value could be multiples higher. But the if is huge, given the history and the funding needs.
You also mentioned that Agenus owns a stake in another company.
Yes, Me&K Therapeutics.
Yeah.
Agenus holds a majority stake, and based on recent share counts and prices mentioned in the sources, that stake was valued at over $150 million. That's a significant asset on their balance sheet, often overlooked.
And on the execution front, they brought in someone new recently, Dr. Richard Goldberg.
Yes, hired in May 2025 as Chief Development Officer. This seems like a key move. He's described as a big name, an expert, especially in GI cancers directly relevant to their lead MSS CRC program.
His job.
To lead the clinical development, the regulatory strategy for BOTP. The hope is his experience will help accelerate things, navigate the FDA, basically improve their execution on the clinical side. A strategic hire to build confidence.
So pulling it all together,
Yep.
What's management's overall vision here? How do Zydus, the cost cuts, the new hire fit in?
Their stated goal, based on the sources, is to be a leader in new immunotherapies. Leverage their tech, advance the pipeline. They see BOTB as potentially transformative for these tough cancers.
And the recent moves are steps toward that.
That's the narrative. Zydus provides stability in manufacturing. Cost cuts preserve cash. Dr. Goldberg strengthens clinical leadership. They view these, plus the positive data, as steps to overcome the past issues, prove the value, and eventually get rewarded by the market, despite the low stock price history.
Okay, let's crystallize it for investors. What are the absolute key things to watch, near term and longer?
Number one, without a doubt, is at ESMOGI presentation, July 4th, 2025. That expanded MSS CRC data, especially the median OS and 2-year OS in the no liver mets group. It's the immediate critical catalyst.
Okay, after July 4th, midterm.
Watch for the official closing of the Zydus deal should happen within about 60 days of June 3rd. Then, confirmation they're hitting that reduced cash burn target, around $50 million annually in the second half of 25, and huge milestone, actually starting the phase 3 trial for BOTBL and MSS CRC, also planned for H2 2025. Plus, any updates from other trials, HCC, sarcoma follow-up, etc.
And longer term, what moves the needle down the road?
The big one is securing that major partnership for U.S.-Europe to fund phase 3. That would be massive validation and financial relief. Then how that phase 3 trial progresses, enrollment, interim looks maybe, any further asset sales, resolution of the lawsuits, and ultimately, of course, successful trial readouts, regulatory filings, and potential approvals. Look, it's a classic biotech story in many ways. Really exciting science targeting huge needs. BOT's mechanism looks differentiated. The data in some tough spots like CRC and sarcoma is intriguing.
Right.
But it's balanced against a tough financial history, a clear need for more cash for the next big step, and the inherent risks of drug development. Zydus bought them time in manufacturing, but the marathon isn't over. Execution and funding are everything now.
Right. So wrapping up our deep dive on Agenus, we saw the Zydus deal providing cash, manufacturing certainty, and cost relief. We explored the science behind BOTBL, the promising signals in tough cancers like MSS CRC and sarcoma, and that really critical upcoming ESMOGI data point.
And we looked at the financial path, the extended runway, but also the significant funding gap for phase 3, plus that complex investor backdrop, the history versus the potential.
Key takeaways for you exploring Agenus. The science has potential in high-need areas. That July 4th data is the next big test. Zydus helps, but much more capital is needed for the ultimate goal. Investor sentiment is definitely mixed.
Yeah, the science looks promising, but turning that into approved drugs and rewarding investors requires navigating major financial hurdles and executing perfectly on those big, expensive trials.
Exactly. Which leads to the provocative thought, can Agenus actually bridge that gap? Can they translate this science into approvals and commercial success, finally turning around that long-term stock performance and rewarding the investors who believe now? Keep a very close eye on ESMOGI and on how they plan to fund that crucial phase 3 program. If this deep dive helped your stock exploration, please do subscribe to the deep dive, give this deep dive a like, and hit those notifications so you don't miss our next one.